Hi everyone, and welcome to the webinar. I was happily talking away and asking David if he'd started the recording, and I hadn't actually started the webinar, so apologies for that. Thank you so much for coming along to this session. I know some of you who were with us earlier on for the London session, and I know others of you, different parts of the world, are joining us for what we call the start of the New York session. And this morning was fantastic, some great moves, and since then we were looking at the pound, particularly cable and pound yen, and of course you've had the BOE in the interim. Had complete reversal of what happened this morning. So as I said, lots going on and lots of trading opportunities as well. But before we start, as always, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, as well as myself, you all know, or most of you will know, that this session, I share this session with my husband David. He's sitting next to me, and we will be looking at the markets, and in particular the Forex market, through the prism of volume price analysis supported by our quantum trading tools. And as I explained very briefly this morning, and very quickly, volume price analysis, if it's a new methodology to you, all is explained in the books that are up on Amazon. And we've actually put everything together in what we call the Forex Trading Library. VPA is the technical analysis arm, if you like, of our approach to the markets, because you have to look at what's happening on the fundamental landscape and also related markets, and increasingly the political aspect of what is going on with the markets as well, and how politics is also driving the price action. And you can see that both in equities and the most, if you like, just another example of this. Some of you may know, obviously yesterday we had the FOMC, and one of the things that about the Fed is that Donald is not happy with the chairman of the Fed. That's Jerome Powell, and there's even talk of whether he can somehow have him removed as chairman. It has happened before, this tension between the government and the Federal Reserve, but coming at a time when there are all sorts of other issues at stake. You've got the trade wars, you've now got currency wars, because all the central banks are very dovish, and it's a race to the bottom once again. So as I said, that if you thought just trading was trying to figure out whether something was going up or down, there is that side to it, but there is so much more, and it's all explained in the complete Forex Trading Library, $9.99 at Amazon. This is a slide from our education program where we actually explain this in even more detail. As you can see, they've got the four capital markets. Forex very much at its heart. It's the money market. It's where the money flows the quickest, fastest, and reacts the quickest and fastest to sentiment. And what we have done, as I said, all supported by our quantum indicators. They work in all markets. The ones that are particularly Forex specific are these four, which we have bundled together as the currency dashboard, which you can actually buy them individually. I'll be looking at two. I'll be at the CSI and the matrix, which I used this morning to pick out a couple of trades which I want to follow up on, particularly as they've been affected by the BOE, and there's been a divergence certainly and cable against the other major pairs. With regard to the indicators, you can just buy one. There's a bundle, such as the currency dashboard, or you can buy the full package. If you buy the full package, all future indicators are added free to the package. The latest one was actually we developed an index for the British pound. You get 24/7 support for life, and all upgrades are included, and they're yours. They're not we don't operate a lease system. You actually buy them. They're yours for life, and they're all covered by a 7-day money back guarantee. And if we have a lot of quantum users who maybe start with one or two and then gradually upgrade, and whatever you buy, it will always you will always be credited. The platforms we support at the moment: MT45, NinjaTrader, TradingView, and TradeStation, which we are working on at the moment. All the details are at quantumtrading.com. Pricing, videos, support pages, everything you really need to know about the indicators. I mentioned the program. As part of the program, you get the full package of indicators. You just decide which platform you would like to use. And if you've bought anything from us in the past, again, that will be credited towards the cost of the program. And the program is really all you need to know to trade Forex with confidence. The website for that is quantumtradingeducation.com. And again, you will find all the modules that are included in the program. Just really everything you need to know. I'll just pass over.
Sorry, Anna caught me unawares there. I was just flicking around on the charts. Apologies. That's all right. Very warm welcome. Good to have you with us today, and nice to see so many of you in the room. I can see it's a mixture of existing, and also we've got 1 or 2 new people as well. So a very warm welcome to you all. If this is the first time you've visited us, then we're more than happy to answer questions. Sorry, I was distracted by something going on outside. More than happy to answer questions on air for you. If they're long questions, if you've got short questions, just drop them in the chat box and we will answer them on air for you there. Primarily on MT5, but we'll switch over to NinjaTrade as well. Anna's got MT5 running. I've got NinjaTrader running on my side. So we'll flip-flop between the two and just see what's going on in the wonderful world of Forex as the US markets get underway as well, no doubt picking up on the Fed last night. So the dollar will once again be in focus. I'm going to pass back to Anna and we will get going.
Okay, thank you. Having said this morning that my cough and cold and what have you has gone, and I was managed to speak properly. It has sort of come back a little bit, so do forgive me if if it suddenly goes quiet. It's because I don't want to inflict my my bad throat on anybody. Right, very quickly. I said this morning. I said earlier. In the webinar this morning, we started at actually 6 o'clock, not the webinar, but actually looking at the charts this morning. And it was before the start of the European Open, and using the indicators to try and find a potential trading setup. And what I particularly like looking for, and it's not it could be something that you like to do, and it's certainly a bit different to what David does. We trade very differently. Those of you who've come along regularly will know David really looks at much more at reversals in the sense that when things are overbought or oversold, because this is a market of mean reversion. Now I'm just going to put all the currencies back on the CSI. And this is one of the features of this indicator. You can actually take off and perhaps a currency that you don't particularly want to consider at any given time. There are again multiple time frames. Let's just move this up. Let's start like that. And what caught my eye this morning was, first of all, the US dollar. We've got the 6-minute, the 12-minute, and I've got the 30-minute. This is the US dollar from this morning. As you can see, very heavy selling of the dollar in the Asia session, which is a bit unusual actually. It tends to be traded much more in Europe and New York, but overnight the selling of the dollar was really was very consistent, and as you can see here, it's very beaten down on the 30-minute, and I think if I look at the 1 hour, it's also beaten down. When something is overstretched as it is now, and we can see here we've got the Swiss franc, inevitably we are going to get a turn. There's going to be a reversal. So if you like, when David looks at the CSI, this is the first thing that draws his eye, and it would catch anybody's eye, because as I said, this is a market of mean reversion. But you can use this indicator in a number of different ways. You can look at where lines are crossing, and also if lines are in the center, not necessarily because something is happening at that particular moment. It's because what is likely to happen, because when they are in the center or they're moving in the same direction, chances are it's in a congestion phase, and from a congestion phase will come a trend or a move. There will come divergence, and that's what I was looking at this morning, because what I saw this morning was I could see the dollar was still had been sold off. What I could also see was actually that there was beginning to be divergence on with the British pound. There was some buying coming into the British pound, and then the question is, well, I can see the British pound is being bought, I can see is it in cable, but I also wanted to see where else the British pound was being bought, and this is where the matrix comes in, because what the CSI does, it tells us the performance of an individual currency in a given time frame. We can see the buying of the Canadian dollar, we can see now there's a sell on the euro, we can see the Japanese yen is being bought, and here we can see the British pound is now being sold off quite strongly. But we want to know is, well, that's awfully interesting, but against which, in what pair, which is the pair that is going to offer us the best trading opportunity? So at the moment, here we are. I've actually isolated the British pound, and the reason I took the others off, because one of the other things you can do with this indicator, if you are just focused on the one currency, so for example, if you like to trade the British pound or you like to trade the euro, and you're not devoted to maybe one particular pair, but you just like to look at the euro or the pound complex and maybe take a trade in the best pair, the best pound pair or the best euro pair, what you can do is you can simply turn off all the other currencies and look at what the British pound is doing. We can see here the sell-off, and then what the matrix does, excuse me, it then highlights, well, where has that selling been the strongest? Now, you've got here, I've got cable here highlighted in purple, and I've got the British the pound yen highlighted. That is because what you can also do, I selected these two pairs, and what I wanted to do, I then wanted to see not only what the British pound complex was doing, but what my two trades were doing. So I bookmarked them, and that helped me keep track of the two pairs in question. And that's even before you know, we have a look at a chart, and we can just bring that down and we can see where they are in the different time frames. So that was the first step this morning, and let me just bring up the charts very quickly. I had the 3-minute chart here. This is the pound yen, because what we have now, we have the volume point of control. This is a congestion phase. If I just bring that down, the reason excuse me, congestion phases occur either because the market at that particular time, it's very quiet for this particular pair. There are not enough traders interested in this pair, so the price action will simply be contained within a range, and it's the volume point of control is based on the principles of market profile. You can call it the value area. There is no strong divergence in one direction or another. Now this congestion here, before we had this dramatic fall, is actually in the run-up to the BOE. So congestion phases happen for a number of reasons. First, maybe the market has simply decided there's no reason to push the price in one firm direction or another. There's an agreement, there's price agreement, the buyers and sellers are in agreement, there's a balance, it's the fulcrum of the market at that point. Or in Forex, it's simply a session that the traders just aren't interested in that pair. Particularly in Asia, there are certain pairs which just aren't heavily traded. Euro pound would probably be a good example, whereas something like an Aussie dollar or an Aussie yen, much more heavily traded. Then you will have congestion phases, as I said, before a major news announcement, which we had here. Now, this is from this morning. The VPOC prior, if I can move this up here, prior to this move that came off here, was in this area here. And what I saw the VPOC down here, I saw the hammer candle. The CSI was actually showing buying coming into the British pound, so I knew there was British buying pound. There was buying of the British pound, and the heaviest buying was actually against the dollar and also against the yen, and this is the move that we tracked this morning. And if you want to catch up on the move in real time, it's actually on the recording, which is now up on my site. Now, in conjunction with the time charts, I also use a Renko chart, because a Renko removes time from the equation, and for some reason I'm having a slight problem with keeping the indicators on this Renko chart. I have no idea why, but there we are. And what Renko does, it highlights these congestion phases. We can see here the price is bouncing between the pivots. I'm going to finish this, and I'm going to pass it over to David. So we have the congestion phase here represented in Renko. This is the congestion phase we can have here with around the VPOP. Then we have the breakaway. And the way I use this indicator is I like to see all the dots, and the dots marry up with the trend monitor. Apologies for that. I just had another coughing fit, and I said you really don't want to see you don't want to hear my the noise of my barking at you over the airways. Right. I like to see a number of dots marrying up with the trend monitor, but also seeing what is happening on the chart. I see the volume point of control. It was actually also accompanied with volatility because of the news. That's fine. Then what happened is the price actually retreated to within the spread of the candle, which we expect because the volatility has been triggered. But this is what keeps us in. It's the Renko when the indicators stay. We've had problems with the internet today, which doesn't help either. Basically, what Renko does, it absorbs the noise that we can see created by the volatility, just created by the noise of the market. And at the moment, this is carrying on lower. So actually, out of one pair this morning, we had a really nice trade to the upside based on what the CSI was saying. The congestion phase that preceded the breakaway was about quarter past 6 this morning. Then I know we had the BOE, and that's actually delivered us a trade to the downside as well. And it's also a great example of how sentiment can completely change from one session to another on a particular pair. So if you are an intraday trader, you have to be aware of this potential change in sentiment moving from one session to the other, and not just because of fundamental news. Now, I'm going to actually pass over to David. Hopefully my voice will improve somewhat as we go through the webinar, because as I said, I was also long cable of this morning, and that has also reversed and cable very much against the run of play with the other majors. So, oh, thank you, Melanie. I really do need it. Thank you so much. You're very sweet. I'm just going to pass over to David. He's got Ninja Trader, and he'll talk you through what he has been watching, and I'll be carrying on watching, seeing what's happening with the pound yen. On the, as we can see here, on the 30-minute CSI and matrix, we have the pound yen down at spot 25. It certainly looks as though it does have some way to go, and we've also got a cross of the two lines. As I said, this is when you have a cross, it's normally indicating that a trend is already underway. I'll pass it over to you.
Just switching screens. I'm just looking over on Anna's side. Hopefully that's coming up on her screen. Bear with me a moment. Hold on. Hopefully that's with you now. If you could just let me know that you've got I've got 4 charts up. These are the indices. I've got the dollar index, yen index, euro, and pound. So hopefully they have all come up. If someone could just confirm, that would be great. Yeah, brilliant. Thank you very much indeed. Thank you. I thought we'd start here because basically it does just, there's a lot going on, and there's also an awful lot going on in terms of relational analysis, related markets, and so on and so forth. So it's fascinating at the moment. And given that we just opened up in the US session, it'll also be interesting to see how the market reacts, the US market reacts to the Fed news from last night, because whilst obviously it reacts on the spot, now you've had a lot of overnight stuff, you've had the markets have had time to consider everything and so on and so forth, and that's when you start to see the reaction coming into the primary US market, because it comes in 7 o'clock our time, and now we're starting to see it take effect. Basically, this is just pull that back a bit. As I say, I've got the dollar index here on left-hand side, I've got the yen index here on right-hand, down at the bottom here we've got the euro, and over on the bottom right here, we've got the pound index. And these are all available on either Ninja or MT5, MT4. This was the move this morning. Very, very strong selling of the yen throughout the morning, pretty much up to 11.30. Now we're starting to see it bottom out, and we're starting to see yen buying coming into the market. And that was pretty much the move that drove, really, it wasn't all the yen pairs, but pretty much all the yen pairs. And what's happened in the last hour or so, particularly as far as the UK is concerned, is because we've had a major fundamental release, if you will, of a statement and policy from the central bank. What we've now got is a sense of divergence, because the pound has actually sold off quite strongly, and that's purely being driven by pound sentiment, as you can see here on the pound index. But is also now being helped a little because we're starting to see a slowdown in the other pairs in the yen complex. We've had very strong buying in the Canadian yen this morning. That was reflected on the CSI. I don't know whether you noticed it, but when Anna had her charts up with the multiple CSIs, you could see it rising on 5, 10 and 15 very strongly. And you could also see the change in sentiment on the yen index. We'll pop over to that in a minute. So basically that's what's going on in terms of yen. We're starting to see some buying of yen coming in. Dollar at the moment is pretty much moving sideways, so not much going on there. The euro, for the time being at any rate, euro's had some decent strength but is now in congestion, and this is the pound selling off that we've seen following. This is 12 o'clock our time. Nice thing with Ninja is it actually prints your real time, so you know exactly where you are on the chart, whereas on MT4 and MT5 tends to be about 2 hours behind because of the clocks, because of the difference in where the brokers are delivering the feed from, or MetaQuotes are delivering from, rather, from their servers. So this is real time. We're now 110, 115, and this is the US market getting underway. So if you just head back onto the multiple CSIs I've got, so where are we? There we go. There we go. This is on 5. This is the yen buying that you can see, which has come in very strongly. This is 11 o'clock, 11:15. Very oversold and is now starting to buy quite strongly. That's on 10. This is on the 10-minute time frame, exactly the same sort of thing. It's been very oversold and now rising very strongly, and up onto 15. And it's just a classic example of what you're looking for constantly is this follow through in across the time horizons for whatever it is you're trying to do. Whether you're looking at oversold or overbought conditions, or whether you're looking at strong trends, it's trying to understand whether that trend is following through across the time frames. And clearly what is evident from that, just that quick glance across the CSIs, is that yen buying from 5 is very strong. It's very strong on 10, very strong on 15, and they're all behind. Obviously, the slower the time frame, then the less high this has moved up the chart, because as we get to a potential pause point over on 5, for example, once the yen gets up to the top here, we may well see a reversal on 5, and that in turn will have probably been reflected on the 1, 2, 3, 4-minute time horizons. So it's the constant issue that you have to face as a trader, which is, what is my time horizon and what is it I'm trying to do, and for how long? because a scalping trader on a 1 minute can make money to the short side, whereas a long-term trend trader on the long side can equally make money. And all the long-term trader will see is that on the scalping situation, that is just simply a pullback. So in other words, a scalping trader is essentially trading little pullbacks, little reversals, which are of absolutely no interest to the longer term trader who just sees that going on as part and parcel of the longer term trend. It's a fact of life. Nothing goes up in a straight line, nothing goes down in a straight line. And it's a question of teasing all that apart and trying to identify what it is you are trying to do in that particular trading opportunity. Are you scalping it, or is it of no interest because you're a longer term trader? But the essential components are the same in that it is like the analogy we use a great deal is dropping pebbles in a pond. If you throw a pebble into a pond, the ripples from that from the stone falling in the pond move out and away from it, ultimately to the bank side. And that's the same principle here. What happens in the fastest time frame will ultimately ripple its way through across the various time frames, all the way out to the very slowest. You can see here also, I mentioned the strong Canadian buying, very strong this morning throughout, partly driven through the yen, but also partly driven through what's going on in terms of oil, which in turn is being driven partially through the dollar. We've seen very strong gains in gold as well. Again, we wrote about gold a few days ago. It's exactly the same. It's being driven by dollar weakness, which is still flip-flopping around here on the 15-minute and just in congestion. It's not showing any great signs of getting up off the floor right now. Just head back over onto the charts, where I think I've got the CAD yen up at the moment. There we go. That's the CAD. As Anna said, one of the place my eye is always drawn to, whatever I'm doing in any time frame, is always the extremes. I'm always looking for those currencies which are very strongly overbought or very strongly oversold, and thereafter what I'm doing is I'm looking to match up those opportunities to basically get into the trades early, because that is the payoff. If you trade reversals, the payoff is greater because you're into the trend earlier. The downside is you have to put more money on the table because you've got to allow for a wider stop loss. A scalping trader jumping on a trend, for example, might only have a 3 or 4 pip stop loss, maybe 5, something like that. If you're jumping into a reversal trade, first of all, it requires patience because it may not happen immediately. And secondly, you've got to set your stop loss that much wider because you've got to allow for what's going on right now in terms of the Canadian yen, which is congestion. I've got these on the same time frames I had this morning. I've got 30-second over here. I've got 2-minute, 5-minute, down onto 10, 15, and ultimately over onto the daily. That's a strong move we've seen. And it really does highlight, I guess, the whole issue. If you're a longer term trader and you're looking at the daily chart, you might have seen this coming in, some decent buying under there, and thought, yeah, we've got some decent support here as well, some decent buying under there. I might jump into this. It looks like a promising trade. Now, someone trading that for the longer term may have been holding that already for a couple of days. And in amongst all that, there will be endless opportunities to scalp the market to both sides. And really, that's all this business comes down to. It's just identifying your window of opportunity, what it is you're trying to do in your chosen time frame. It doesn't mean that you can't be a scalping trader on one trade and a longer term position trader on another. It just means you have to identify what it is you're doing on that particular position, because the easiest thing to do is to flip it over if it doesn't go in your direction, just flip it over into something longer term, say, well, okay, actually on the hourly chart it looks all right. We all do it. It's that's human nature. It's part and parcel of trading. It's a fact of life. So what we've got at the moment going is we've got a congestion building, we've got a potential reversal building in terms of, certainly in terms of the CAD and the yen. Just have a look at oil, see what's going on in terms of oil, because oil and the Canadian will be reflecting one another, not always, but certainly it's something you've got to watch. There we go, that's oil. This is on 15.30 and over on the daily. And you're starting to see that pick up. We've had a decent congestion phase on oil going on over the last few weeks. Now we're starting to see a pick up. There's a ton of resistance overhead from a technical perspective, but that's not necessarily going to stop it. Depends how weak the dollar gets, certainly over the next few weeks into the next FOMC, for example, depending on what happens next time around, whether they do cut rates or whether they add further dovish tone to their already hinting at a dovish approach to the economy. But that's what we're seeing right now. Strong moves on oil. We've got some. What's interesting about the daily on this is gold down at the bottom. So we've got 1530 and daily on across the top on oil. Down the bottom we've got 1530 and daily on gold. What's interesting about gold is it has touched the $1,400 per ounce region. We suggested that around 1380, 85 would be the region that's going to struggle a little bit. What's interesting is we've now got a volatility trigger on the daily chart, which is always a warning sign on any time frame. The expectation is what's happening there is the market has moved outside the average true range. In other words, it's outside what is normally expected. It works on ATR, the average true range. As soon as the price action spikes outside that region, then the indicator is triggered. You get the little purple arrows top and bottom. But what that's telling you is that, first of all, you've got volatility. It happens in real time. This candle hasn't closed off yet by a mile. We're halfway through the session, but it's already told us there's volatility. So the expectation is on volatility in the market is that you expect the market to, at the very least, congest. So what we expect to see for gold over the next few days, maybe even longer than that, is an extensive congestion period building within the spread of this candle. Because volatility and market makers and big operators go hand in hand, it's the speed of the market. Basically, when the market moves very quickly, whether you're on a 1 minute chart or a 1 hour chart, whatever it may be, if the market spikes very quickly, your instant reaction is to jump in, because that's the emotional trigger that the insiders and market makers use all the time. They know the emotional response you will have as a trader, because you'll have the fear of missing out, FOMO. You don't want to miss out on a trade because the market's moved rapidly. And so what do? You jump in, and you probably jump in right at the time when you should be actually not doing anything at all. And the market makers then reverse that into congestion. The emotional pressure starts to build. You either get stopped out or you close out because you're frightened, you're fearful what might happen, you're not sure, uncertainty and everything else. And you lose that position in the market and you lose money. It's as simple as that. It's very straightforward, very simple, very effective. It's used in all different ways. It's used on news, geopolitical, anything they can do, they'll use it. And that's the power of the volatility indicator. That's what it's delivering. Even more so when you see it on the daily chart. So if you see this on a daily Forex chart, doesn't matter, index chart, whatever it is, then expect some congestion to follow. Now that may not bother you if you're an intraday scalping trader, but if you're a longer term trader, then it certainly will. So it's certainly building into an interesting picture on gold, and maybe a while before it blasts through the 1400. Let's go back onto the CAD yen, see what's going on there. You can see we've got volatility trigger on 30-second chart, works in all time frames, literally come in right now. Huge spike in volume, it's what you expect to see. Trap move developing, we're going to apply some pressure here. These guys have racked the market up. Everyone's jumping in thinking, oh great, the market's going to spike, it's going to break higher. Now we're going to create some pressure and squeeze all those guys who have traded in here are now stuck in a trade, and we'll wait for the market to congest. As I say, it works in all time frames. Doesn't matter what chart it is, it'll work. We had another one here. It did actually spike outside. Then we had an extensive period of congestion, actually reversed on that occasion. This is what we expect to see. If you don't have a position in the market and you see the volatility trigger come in, you've got to wait and be patient. Wait for it to clear. If you're looking to trade just the long side, you're looking for the market to rally higher, then you've got to wait for it to clear, through 82, 83, 84, whatever your comfort zone may be. So if you're not in the market, it's relatively straightforward. You stay out. If you are in the market and you've got a position and it's profitable, my personal advice, which is what I always do, I'd close out, take the money off the table, because I don't particularly want to sit through congestion. It's painful. And wait. You can always jump back in again. It's very cheap to get in and out of the market. That's just a personal choice. I'm not saying that's a rule to follow. I'm just saying that's a personal choice. If you've got a position in the market which is in loss and you see one of these come in, then it's a tougher decision to make. You take your loss, or do you wait and maybe get the prayer mat out? It's also confirmed by the fact that we're trading around the VPOC indicator anyway. This is the volume point of control, so we know we're in for a congestion period on, and bear in mind this is a 30-second chart, but all the principles are exactly the same, whether this was a 1 minute, 5 minute, 10 minute, doesn't matter. The principles are exactly the same. Very strong level of platform of potential support down here on the accumulation distribution indicator. The thicker the line, the more developed is that region. In other words, the greater the number of times it's been tested, so the stronger it is. The stronger it is, then the more likely it is to act as a platform or to act as a ceiling of resistance. This one is not so strong because the line's not so thick. That's the beauty of the accumulation distribution indicator. Does it all for you, does all the hard work, tells you instantly where those really strong levels are and where the less strong levels are. These narrow, these less thin lines up and down, and you can actually reduce them so you're just left with the thicker ones. I tend to leave them at the default setting, which is to have everything on. And then as they're tested and retested in real time, they will also strengthen and widen. So this is a very strong platform. This is a relatively strong area of a ceiling of resistance. And clearly, if the market breaks to the upside and broke through that, you've got a decent resistance level underneath to place a stop loss below, which will then act as a platform of support in due course. Coming up to test it again, you can see there. So if we break free from this volatility trigger that we've got here, just pop that down again. Looks like we may have had the pause point. If we go down onto the 10-minute, look for other signals, other signs. We had the reversal here on 10. What happened? We had a deep wick to the lower body, ton of volume coming in under there. There must be a decent amount of buying coming in there. We did have some selling on the next one for sure. Similar sort of volume, so it doesn't look terribly strong. Interesting to see how this candle develops and whether we can break through this minor resistance region above. But certainly strong buying under that one. Market's not ready to fall just yet. Looks like we're breaking away from the volatility now. And you might think, well, that wasn't too painful. That's 1, 2, 3, 4, 5, 6 candles. Okay, on a 30-second chart, it's not too painful. But bear in mind, if this was a 5-minute or 15-minute chart, you're sitting there for maybe an hour and a half, which I can assure you is painful. So it just reinforces the power of the volatility indicator, and it's the expectation. Very similar to the volume point of control in terms of the volume histogram itself. We're breaking away from the volume point of control here, which was the fulcrum. The market has now reached a bias which is bullish. Trend monitor has now transitioned to bullish. You can see here also through this congestion phase, we did flip-flop, but we never actually went into bright red. We went from darker blue into darker red and back again, back into dark blue and out the other side into bright blue again. And also the trend line here, it flatlined around the fulcrum of 0, but never actually dived very far below it. So use the two in conjunction. It's a single indicator. You get two indicators in one, so use them. You can also see now in this little rally, we've now got rising prices with rising volume, which is excellent. That's what we want to see. That's always a good sign and a solid sign. You want to see rising price, rising volume. And the inverse of that is you want to see fall. If the market's falling fast, you want to see falling prices and rising volume with that as well. Because the market takes effort to fall as it does to rise. It's exactly the same. We're all familiar with gravity. We know it takes effort to get something off the ground. But in the trading world, it takes effort for something to sell off as well. It can't go down on low volume. If you've got falling price and falling volume, not going very far. Which is a huge principle when you're trading to the long side and you see a reversal coming at you and you're trying to figure out whether it's a full-blown reversal or just a reversal from primary to secondary. In other words, a pause point. And if you see a rise and you've got falling volume and falling price, then it's the secondary because it's not going to go very far. Simple as that. 2-bar reversal at the top, little pivot come in. Bit of weakness coming in. Just head up onto 15. See where that's going. Got a pivot up there as well. Decent volume under that one, supporting. Just see where we are on the CSIs. There we go, Canadians still rising. But now we've also got the yen, which is rising very strongly with it. So it's not going to be the strongest pair, and it certainly wouldn't be one that you would look at for an opportunity for jumping in right now. We go down onto 5, just wait for that to load. When you see currencies rising or falling together, as we've highlighted many times, those are the ones which are either going to be in congestion or just not going anywhere. There may be minor trends, because if you've got very strong buying or selling in one currency and less strong buying or selling in the other, then the differential between the two may be enough to generate a trend. Imagine it as I've used this analogy many times, imagine two trains on two parallel tracks leaving the station. They may be leaving at different speeds, so there may be some differential speed between the two, but there's not going to be a strong trend of those two because they are moving together. Strong trends develop because you've got strength in one and weakness in the other, and that's what you're looking for the whole time. You're looking for weakness, selling of the euro here, you've got buying of the New Zealand dollar. So if you were to look at any charts, you could pick them off one by one. You'd look at an Aussie New Zealand, not going very far because the two are moving together. Aussie yen probably not going very far, but if the yen selling picks up momentum again and the Aussie keeps rising, then you'll see that develop. CAD yen we've already talked about. You've got the Swiss franc here and the Japanese yen. So the Swiss yen pair is not going to be doing much right now because it's following it around at the moment. So they're moving in the same direction. Euro dollar, not much going on there. Euro and dollar falling together. So this is what you're looking for the whole time. Now, when you start to see crosses developing, this is where you might jump in as a trend trader, for example. You've got the euro falling, you've got the yen rising, they're crossing. So you're going to see a decent trend on that chart. This is on 10 minutes. And so on and so forth. It's a question of just picking up what it is you want to do in your chosen time frame. You see the New Zealand dollar here that's just meandering around in the middle here, not really doing very much. There may be sufficient, for example, if you looked at, I don't know, the euro New Zealand, for example, where you've got strong selling in the euro, if you were to look at that chart on 10 minute or around that sort of price area, there would be a minor trend because the euro selling is enough to develop a trend in that particular currency pair, but it's not being helped by New Zealand buying. It's just sort of flip-flopping around. Now, if this starts to shoot up here, then it certainly will develop a trend. And that's what you'll see in the chart, which is why we always start with the currency strength indicator. Just head over onto the matrix. This is the matrix on 10. Yeah, let's have a look on 10. Let's just see what's going on. This is the Aussie dollar. Let's just see what's going on in terms of the dollar right now. Okay, it's a little bit mixed, as you can see. We've got selling of the dollar down here against the Canadian. Some mid-range stuff here, and then we've got buying of the Aussie up here, selling of the dollar. So we've got selling dollar, buying CAD. So it's all a little bit mixed. We've got dollar yen down table here. What you want to see, of course, is you want to see this develop into the associated pairs all moving in the same direction. So what you want to see is all this lot, if we're looking for dollar selling, you want to see all this lot move down the table, well down to the bottom, which they may well do in time. And equally, you want to see these guys approach and advance up towards the top. And that's what you're looking for the whole time. And I think I'm going to have to pass back to you. Okay, sorry about that. Just pull that over there. Oops. If I can, I'll try. Bear with me a moment.
And what I've been doing since David has been speaking is I just wanted to show you a couple of things. As I said, the other pair that I was interested in this morning was cable. Let me just take that off. What if you've not come across MT5 before? I've introduced, which you don't have the same feature on MT4, this is MT5, is they have something called docking. So if you right click on the chart, you see see it says dock, there's a little pin next to it. What that allows you to do is to actually move the charts out of the profile and onto another screen, which you can't do with MT4. It does make life a lot easier because it means you can have many more charts on the screen, in the workspace. You can spread them around however many monitors you have. But I just want you to have a look at a couple of things. First of all, going back to this is the 3-minute chart, back to the volume point of control at the point at which both the pound, yen and cable actually broke away from on volatility, because that was with the BOE. But look at the trend, the kind of trend we've had. This is what we call a trend it's a reasonably smooth trend. Yes, there were times when the price pulled back, as you can see here, the little blue candles, but in the main, it's a really nice, it's a fairly steady trend. If you compare that with cable, which is much more messy, that's the best word that I can describe that. And although it didn't have volatility candles in the trend lower, of the two, as I said, this is a much smoother trend. And when we look at it on the Renko version, we're actually looking at a little reversal here. Having said, I don't necessarily start with reversals initially. What reversals are particularly good at is also getting you out of a move, because it is coming to a point of reversal. So it's not just for entries, but it's also for potential exits as well. And what has happened here, as we can see here, we had these little pullbacks here, little pullbacks there, but it's relentlessly red on the trend monitor. And if we look at the cable one, let's have a look. Pretty much the same, slightly more pullbacks that we see here, but the overall trend lower was maintained. In fact, we had this little much deeper pullback, and we know that because we actually had a change of color in the trend dots. They went to gray, and in fact, we had a couple of blue ones here, but the trend monitor stayed again relentlessly red. Now, what's interesting about this of the two, we've now got a bit of divergence between these two pairs, whereas we can see let me just move that out of the way, stop that one, so I can just move past that over there. What we see here is we can see a little reversal coming up on the pound yen, but cable looks to seem to want to move lower. So two pairs, both with the pound in them at the moment, looking to move in the opposite direction. Now, there's sorts of reasons for that. First of all, it could be that as I said, the cable is at odds with the other majors. The dollar has been sold off heavily here. The driver for this move has been the sale in the British pound, and it may be now that the cable is now joining the other majors, and the dollar is going to be continued to be sold in the US session. We'll have to wait and see. The move higher in pound yen is potentially is reflecting the fact that equity markets, getting back to this relational aspect of the forex market, because it's got a yen in this pair. Obviously, when the yen is being sold, equity markets are rising. So this move was precipitated by the BOE. Market didn't like, just wanted to sell the British pound, this one as well, but it looks like now that's coming to an end. Maybe the pair will now follow the general sentiment of the market. And going back to the CSI, the judgment is now, well, if we look at the 30-minute chart, we can see here the pound looks still to be falling, and the yen looks to be rising on this time frame. But the reversal has certainly happened, as we see here on the 5-minute chart. Now, whether that continues or the dominant trend that we have in the 30-minute chart kicks back in, again, it's a matter of, well, we will just have to wait and see. And just to catch up on what they're doing on the bookmarking side, let me have a look. As I said, I bookmarked them from this morning. So whether you continue to want to trade these two pairs moving into the US session, it really is what the market is is you know, the market tells us, highlights to us what is the best pair or market to trade. But they are, what's happening here, they're yeah, that's moving, that's carrying on lower, that's there, that's there. We'll just have to, as I said, really just have to wait and see. But it really, what I wanted to show you was the congestion, being in congestion, moving away, using the indicators, and now looking at perhaps reversals to actually exit. Anything you want to add to that, David? No? We're going to stop there. We are back at 3:15. We'll be looking at the indices, and we're going to look at the commodities as well, David. I know some of you come along to that as well. We'll still, you know, we'll see what happens with the as I said, with the indices, given what happened with the FOMC yesterday. So thank you so much for coming along. Next week we're actually back on Wednesday. I have already done the email, so if you look in your inboxes, these sessions, we've got something, we've got meetings on Thursday, so we can't be here. So we're going to be moving to Wednesday, but thereafter we'll be back to Thursday. So thank you so much for coming along. I hope you enjoyed it, and we will